Good afternoon. This is Tom Alexander. This is the stock market weekend update that I do each week. Today is Sunday, June 8th. This is about 4:38 p.m. Eastern time in the US. We are about an hour and 20 minutes away from the Globex session opening. And we head into the new week with three of the primary US trading indices very close to new all-time highs, and then a few others that are not nearly as close, and I think that's important. I do expect to see new all-time highs in either and or SPX, NDX, NYA. So let's take a look at the charts here, and we'll just go through this a chart at a time. Okay, we'll start with the SPX. And as of Friday's close, we're about 2.34% from a new all-time high. Now, these levels are in the weekend report. They're on the website. I'll show you that in just a minute. But again, if you want these levels and you don't have to go back and listen to this video, you can download a PDF from the website. I'll show that in just a minute. But here are the levels. I mean, the most important level now to the downside is Thursday's cash session low. NDX, similar view. We're about a little more than 2% from a new all-time high. That's just one tweet away. Then we have the Dow that is considerably farther away from Friday's close to a new all-time high. We're talking about 5+%. The Russell is light years away at 15.6%. Now the Russell has been lagging for most of the past 2 or 3 years. It flirted with an all-time high and promptly traded off of that, and is a long way from it at the moment. Now the index that is the closest is the New York Composite, which is the broadest of the indices that we follow. It's all stocks listed on the New York Stock Exchange, and it is less than 1.5% from a new all-time high. The equal weight S&P is 5.3%. So what does all this mean? Well, in healthy bull trends, all the indices, all the sectors pretty much will be in lockstep to the upside. It is late stage bull market behavior when you have this incredible constant disparity, and this has been going on really for a couple of years now, among and between the different indices. Now, this can go on for a long, long time. If you go back to the 2000 top, it went on for years. So, could this continue for another year or so? Yeah, sure, it could, but it's at least a heads up. But again, I do expect to see new all-time highs in NDX, SPX, and NYA as long as important downside levels hold. Those levels, again, are updated every week. Actually, they're updated every night for members, but in the free weekly report, they're updated once a week. Now, I want to show I want to show the profile view of this. This has been a fascinating lesson in market profile. And if you're new to this and you want to follow along and see this lesson, you can go here. Go to alexandertrading.com, click on the weekly update. It's free. And then you can go back and you can look at the weekend reports for the past several years, and you can follow the progression of how I am analyzing markets. I analyze markets through the auction market lens, the auction market process of development that is in effect in all degrees of time all the time. I do use the market profile graph. I'm not going to get in a soapbox here, but you don't want to be a market profile trader. You want to be an auction market trader. There are times when the profile graph can be an invaluable tool in helping us to identify what the condition is from an auction market perspective. This has been one of those times. You can click on the weekend report here. You can download a PDF. I will have this video posted by the time you get this. The video will be posted here. And then you can go back at other weeks and you can see this. But we have been following this profile perspective for several weeks now, and it's been quite fascinating. It is truly a real-time lesson in how to most effectively use the market profile graph. Okay, so back to where we are. Let's go to, I dropped my page. Here we go. All right, so this is each profile unit you see here is 1 day of trade. It's just configured in the market profile graphing format. This is the 527 through 530. Actually, this is 6-2. I'm going to leave this out, but this is all one auction. And then on the second, we broke to the upside out of this auction. And typically now, this is a smaller degree auction. There was a much larger degree auction that had been building a multi-week balance area. So you had this minor auction inside of a larger degree auction, and now we're breaking to the upside. Now, I was hopeful that we'd get a more initiative move out of this. In other words, a stronger trending move, but we didn't. We haven't, at least so far. That could be coming. But you can see we're above this high volume node. That's why Thursday's low is important. Thursday's low, if we close below Thursday's low, it brings into question the immediate bullish thesis. And this is why in front of you here. You expect to see in an initiative move, i.e. a trend, you expect to see the market marching persistently higher. You expect to see at worst case, the second day low back hold, which would be Thursday's low. Now, ideally, we'll have Friday's low hold under some sort of retracement that occurs in the cash market on Monday. So that's where we are. Now let's look at the bigger picture, which is very telling. Now, this is the intermediate term. I'm going to get rid of this. This is the intermediate term view. Each profile unit here is 1/4 of trade. Each slot is 1 week of trade. So we are into the second quarter here. We're in the last month of the second quarter. And I've been talking about this for several weeks now. This is an extremely vertical auction, as defined by this particular time frame. Now, there are auctions intraday, there are auctions of a week, there are auctions of yearly, et cetera, et cetera. So this is from this chronological definition of an auction, which is a statistically valid sample size of time, this auction is extended. And you can see that. You can go back and see how extended this quarter already is. And we still have 3 weeks to go in this quarter. So if we do ramp to a new high over the next few days or week or so, it's going to put this thing from an auction market perspective, from an intermediate term perspective, epically extended. The market tends to truncate into rotation. And again, you can go back and you can revisit all of the previous quarterly auctions, and you can see they are dominated by rotation. The market is always truncates into rotation in all time frames. In this particular time frame, it's very vertical still. That's unusual. Now we're coming out of a pocket of rotation. You can see here we've had a multi-week balance area form, and what we have now is an attempt to break out of that balance area in an initiative fashion. So we'll see if it continues. If this fails, then it opens up a lot of downside range. That's why Thursday's low is so important from this perspective. Okay, let's take a look at the internals. All right, I landed on VIX. We'll talk about VIX in a minute. VIX dropped dramatically last week. VIX is the lowest it's been since last March. Now, it can go a lot lower. If the market does drop, VIX will increase. There's no big tell from VIX at this moment, except the fact that it is the lowest it's been, which is showing some sort of lack of concern on the part of big money. That's a gross oversimplification, but it's pretty accurate. Okay, let's look at breadth. Now, I use NYSE data, in particular, advancing declining issues. The 10 the red line is the 10-day moving average of NYSE advancing issues. The green is the 5-day, and the histogram is closing breadth. Now, breadth needs to begin showing more strength than it's been showing. We have these intermittent up days in breadth, nothing ripping or anything, but it needs to pick up here. If we're going to new all-time highs, we need to see an expansion in breadth. We already have, I'll point this out, we already have a divergence working in breadth against really this level right here, and certainly this level. So you have several degrees of divergence working. Now, what does this mean? Not necessarily anything. Using this price breadth work is much more helpful at identifying lows than at identifying highs. However, it is going to be interesting to see if the SPX and or NDX and NYA can claw to new all-time highs. It will be interesting to see what breadth does, if indeed it does that, because the longer these divergences grow, the more meaningful they could be. So until price action dictates otherwise, meaning in this particular instance, unless Thursday's low is taken out, which would open up a lot of other possibilities. It doesn't necessarily mean the end of the world is near or nigh, but it would be a bearish signal, at least in the short term. And it could be a significantly bearish signal. But unless that happens, you've got to give the benefit of the doubt to the upside. Now we have Globex that's going to be open in an hour and 10 minutes now. So that could be telling as well. But it's the cash market that's the most important. If you guys have found value in this, I would very much appreciate it if you would like and subscribe. Enjoy the rest of your weekend. I'll speak with you again soon.